Welcome to today's silver webinar with the Metals Investor Forum. I'm Peter Krauth, author of The Great Silver Bull and editor of Silver Stock Investor newsletter. I'll be hosting today's event. Silver is a unique asset with its own investment metrics and drivers. And today I'll take a deeper look at the opportunities in the silver market. And that will be followed by three outstanding junior silver companies. Last portion of the event is a Q&A, and that's to gain some exclusive insights from these companies. So please be sure to post any questions you have in the Q&A section on your screen in the chat, and I will get started. So today, as I said, we're going to be looking at what I consider an outstanding opportunity in the silver sector. Let's first have a quick look at the investment landscape. So one of the most important things to note, and I think no one listening has probably not noticed this, but the traditional investment portfolio is failing. Since the start of the year, the 60-40 portfolio, 60 stocks, 40 bonds, is down tremendously. We're going to look at that in a little more detail. Inflation has been dramatically higher for the past nearly 2 years. And I think we're entering what I call an inflation and scarcity age, and these are really the new reality. So investors are starting to look for alternatives to the traditional investments, and really silver has been forever nearly a great inflation hedge, helps to lower portfolio risk and increase returns. We'll also look at that in a little more detail, and then I'll get to how and why I see silver as such a great opportunity. So talking about the 60-40 portfolio, this chart shows us how that portfolio has behaved over the last 100 years. And so at the very right on the bottom in that red oval is the returns of the 60-40 portfolio. So it's down approximately 25% or so since the start of this year. Now that's bad. And when you look at the chart, what stood out for me was that the previous periods when these kinds of returns happened in the 60-40 portfolio was in the 30s and early 40s, and then again in the late 60s and 70s. But what struck me was that it didn't just happen on a one-off basis. It tended to happen in clusters. So assuming we have the same kind of returns going forward, I'm not saying that 2023 or even the odd year over the next decade or so, it would be unlikely if we didn't have some positive years. In fact, I even think 2023 could be positive given how bad 2022 was for the 60-40 portfolio. But the fact that these tend to happen in clusters suggests to me over the next decade, we could certainly be looking at very, very challenging and likely negative returns on balance, many of the next sort of 8 to 10 years in the 60-40, 60 stocks, 40 bonds portfolio. So a little closer look at silver right now. There was some research recently that was sponsored by the Silver Institute, research done by Oxford Economics. This slide doesn't address the first part, which is that they looked at the last 23 years. It took an average balanced, diversified portfolio and added silver into the mix to see if silver would help with both lowering risk and increasing returns. And it certainly did. In fact, over the last 23 years, it made sense to hold about 5% silver in an average portfolio, a diversified portfolio, which would hold stocks, bonds, emerging markets, stocks and bonds, as well as commodities and gold. And then, so that's very positive for silver. But then Oxford looked at their own models and looked at silver currently, sees how or sees it as underpriced relative to gold, and then made their own projections. And what their simulations gave them in terms of output was that they feel over the next 10 years, in fact, rather than 5%, the average portfolio, diversified portfolio, would benefit from having 6% weighting towards silver. So keep in mind, in over these time periods, again, not only did silver help boost returns, but it helped lower risk, meaning basically volatility in the portfolio at the same time. So investors with silver, certain percentage of silver exposure, lowered their risk, lowered the portfolio's volatility, and increased their returns, again, both at the same time. So the takeaways were, as I mentioned, the low correlation of silver helps to lower risk, adds value. But it's interesting to note too, and this is from Oxford, that the average portfolio has just 0.2% exposure to silver. And that is through a basket of commodities. It's not direct exposure to silver. And yet over the last 10 years, their ideal was 5% versus 0.2. And over the next 10 years, their ideal would be 6%. So if you go with 6%, then that means the average investor would need to multiply their silver exposure by 30 times just to reach those optimal levels. So even if the average investor would aim for, say, 2% exposure rather than, say, 6%, they would still need to up their silver exposure by 10 times current levels. So remember, the silver market is very small. It's just 1/10 the size of the gold market. And so it really doesn't take a lot of buying to push the price around. And that really, I think over the next several years, decade even, will help push silver significantly higher. There was also a recent interim report by the Silver Institute, which updated their annual forecast for 2022. And an interesting result of that update was that they boosted their demand, overall demand for silver for 2022 dramatically. And now they think that 2022 will see a 1.2 billion ounce level of demand for silver this year. That is actually up 16% over 2021 levels. That's going to be led by industrial demand and as well silver jewelry and silverware. Industrial demand, they think, will be up 6% to 539 million ounces. So that's basically about half of all silver to industrial. And you have the green transition to solar and to EVs that is certainly leading that charge on the industrial side. Then you have physical investment. They expect physical investment will be up 18% this year to nearly 330 million ounces. That was revised up from their earlier forecast in April of just 50 million ounces. So that's more than 6 times what they saw. And they expect that to be another record this year. The physical market remains very, very tight. Premiums on silver coins, bars, etc., are at, in some cases, or near record highs, and they've been in that position for an extended period. It's all driven in part by inflation fears, a lack of faith in government, uncertainties. Certainly, there's lots of geopolitical stresses out there. And so, as I mentioned, silver jewelry will be up considerably this year. They see that up 29% to nearly 240 million ounces. Silverware will be up 72% from last year to 73 million ounces. A lot of this is being driven by demand in India, which was softer last year and the year prior. And with silver prices a bit lower this year, so India has come back in a huge way and is really soaking up tremendous quantities of silver. And so really that's been a big driver this year. Now on the supply side, silver is very much challenged. Although demand is expected to be up 16%, total supply is really only expected to be up 2%. Mine supply will be up, represent 82% of silver supply. And mine supply is only going to be up by 1%. And recycling is expected to be up by 5% this year. However, it represents just 18% of all silver supply annually. So the supply side remains challenged. And what this means, well, if we look back over the last couple of years, we're looking at a huge shift from surpluses to deficits. In 2020, we saw a surplus of 69 million ounces. Last year, we saw a deficit of almost 50 million ounces. And now the Silver Institute expects this year we're going to see a deficit of 194 million ounces. That's a huge 264 million ounce swing from 2020 when we saw a surplus to this year where we're seeing a nearly 200 million ounce shortage. It's a 264 million ounce swing in just 2 years. And the Silver Institute expects that deficits are going to persist as well for the next several years. So what this means is a very bullish setup for silver. As I said, higher demand this year, much higher, 16%. Mine supply only up by 1%, where they had expected originally it would be up by 2%. There's that huge gap. Deficit last year, much bigger deficit this year. And in fact, this year's deficit is going to be 4 times the size of last year's. So all of this, I believe, is likely to help push silver prices considerably higher. And as I mentioned earlier, the silver market is very small. If you compare it to lots of other metals, base metals and gold, etc., silver's worth about 17 billion a year, whereas gold's worth about 170 billion a year. So a very, very big difference, making, again, silver much easier to push around, and substantial buying can certainly help push prices rapidly a lot higher. So your options: physical silver, coins and bars, we talked about that. Premiums are very high. You have physically backed silver ETFs. Do your homework here. They are not all created the same. Then you have, in terms of risk, from lower to sort of higher risk, silver miner ETFs. That's an instantly diversified basket of silver miners. Then you have royalty and streaming companies. You have large silver producers, growing producers, developers, and finally junior explorers. Just a quick note, I recently published a book called A Great Silver Bull. It's available on Amazon in paperback and in Kindle. The book actually talks about all of these aspects of silver and the opportunity and outlook for the metal. And if you want to know more about my research, you can go to silverstockinvestor.com, and you can follow me on Twitter and on LinkedIn. So that is it for my portion. Next up, we have Mr. James Anderson, who is the CEO of Guanajuato Silver.
It's an excellent introduction, and anyone that doesn't know Peter or his book or his research, I would strongly advise you to have a look and a read. Peter has been to the mines of Guanajuato, and last fall or earlier in the year, got a chance to visit our mines and meet the team at Guanajuato Silver. So I think that he has as good a view of what we're trying to do in terms of building Guanajuato Silver into a mid-tier silver mining company as anybody. So I would invite anybody that has questions about Guanajuato Silver to pepper Peter Krauth with questions as well. We are Mexico's fastest growing silver producer. And I think, as everybody knows, we've only got 10 minutes to talk with you about this company. So I'm going to do my very, very best to do a 1-hour presentation in 10 minutes. Let me just further the conversation that Peter's introduced about silver. Silver is a very unique metal. It is the metal that conducts electricity the best, and it is the metal that conducts heat the best. And because of those very unique properties, silver has an undeniably unique part to play in all of our electronics. We need silver solders to as contacts in our cellular phones, in our keyboards on our computers, and to make automobiles, whether they are electric automobiles or internal combustion, traditional internal combustion engine automobiles. They all need silver in the 21st century to work. However, the biggest driver of growth in industrial silver demand over the next several years, far and away, is going to be silver that is needed for photovoltaics in solar panels. What you're looking at is an enormous solar panel farm in China. There are enormous solar panel farms all over the world. Starting in 2023, though, next generation Chinese production is going to require about twice as much silver for each of the solar panel farms. in 2024, that next generation technology will be adopted in the United States and in Europe. So the growth in photovoltaics, currently solar panels require about 12% of all of the mined silver in the world to create the solar panel farms that we need to generate electricity. That number in the next 3 years goes to about 25% of current mined silver. And I don't have any idea where that additional silver is going to come from. As a lot of you know, silver is also unique in that only 30% of mined silver comes from silver mines. Everything else comes as byproduct from other mines, copper mines or nickel mines. And I think that in a recessionary environment, which we may well be getting into, I think it's unlikely that people will put copper mines into production strictly for byproduct silver. Therefore, one would have to ask oneself, what would the price of silver have to get to before there's a true demand response, a true supply response to that equation? We had $28, $29 silver just last year, and that did not encourage additional silver production. So I think the number certainly has to be into the 30s. So let's talk about Guanajuato Silver as Mexico's fastest growing silver company. How did we do that? We bought the El Cubo mine and milling operation from Endeavor Silver in 2021. We managed to put that operation back into production in only 4 months. We're very proud of that. We then bought the Valenciana, San Ignacio, and Topia mines from Great Panther as one package in August of this year. In terms of the Topia mine, we did not lose 1 day's production in taking over that operation from Great Panther. San Ignacio, which had been closed for almost a year, we put back in production in 4 days. And with Valenciana, it took us about 2 months. And we're very proud of that in an industry that often judges its progress in years and sometimes decades. We are managing to put mines back into production after being mothballed for brief periods of time in record amounts of time. We leave 2022, as we speak, at a run rate of doing about 3.4 million silver equivalent ounces per year. Our projected annual production for next year is slightly in excess of 5 million silver equivalent ounces. And you can see the exponential growth that we've managed to attain in our company. These quarters here, the 3 quarters that have this yellow or goldy color to them, that is strictly with our El Cubo operations in production, and the 3rd quarter, 2 months of the new acquisition. So you can see this is exponential in nature. The next quarterly bar on here will likely have a number that's in the 850 to 900,000 number. And we do that while driving costs lower. This is a graph showing our cash costs quarter over quarter. Now, our cash costs, I think, are the best way to view our company. They're the best way to view Guanajuato Silver. And the reason that I say that is because what we've done is purchased these assets at very, very good prices. We've purchased fixer-uppers, and a lot of our money has to be used to spend on CapEx to be able to make these mines and processing facilities viable into the 21st century. However, our all-in sustaining cost for last quarter, the quarter that we just did the transaction with Great Panther, our all-in sustaining cost is $19.58, which compares very, very well to other mid-market silver mining companies in Latin America and elsewhere. There is the city of Guanajuato. Peter's been there. You all should too. It's a beautiful place. There are nice hotels and restaurants and parks. The reason why that's important is because it allows us to drive the very best of Mexican mining talent towards our company. People can work in a dusty town in Chihuahua if they like, or they can come to the beautiful city of Guanajuato and bring their family and live here and work at our mines. Here's a look at the mines of Guanajuato and the region around Guanajuato. Guanajuato is a 450-year-old mining camp. And so that's very important in giving us a social license to be able to continue to mine into the future. And it's one of the reasons why we were able to bring these mines back into production as quickly and as efficiently as we have. So we're going to show you El Cubo, and then we'll show you San Ignacio, and then Valenciana. Penguico, which was our first project in this area, which has a fantastic story all of its own. It was listed on the New York Stock Exchange 110 years ago. It's a very high-grade mine. However, this has become more of an exploration asset for us right now as we continue to ramp up production at our 3 different mining operations. So this is El Cubo. We paid $15 million for this asset in 2021. The last time that it changed hands for $200 million. And then Endeavour Silver, who paid $200 million in 2012, they spent about $35 million building the plant that we get to enjoy today. It has a capacity of about 45,000 tons per month. We spent just $5 million last year bringing this plant up to 21st century standards. You can see that it is clean, dry, organized, and that is how we organize our company and our other facilities as well. Currently, material from our other 2 mines in the region, San Ignacio and Valenciana, are being processed here. However, our other processing facility in the region at Valenciana, called Cata, we will bring back in production within the first 2 weeks in January. Here's San Ignacio. This is the mine that we've just recently purchased in August out to the west of Guanajuato. It has always been a mine without a processing facility. For 10 years, Great Panther trucked material from San Ignacio to the plant at Valenciana. We are currently moving material from here to El Cubo, but in January, we too will start trucking material from San Ignacio to Valenciana. You can see the grades here are excellent. All of the concentrates that we make in the Guanajuato area are silver and gold only. No base metals rather. Our mine at Topia in Durango to the north is a little bit different. It has a silver, lead, zinc mix. Therefore, when I talk about silver equivalent ounces for Guanajuato silver on a revenue basis, it's about 52% for silver, 30% for gold, and about 10% each for lead and zinc. So we are very much a silver mining company in name and in nature. And here's Valenciana. So Valenciana is a fantastic old mine. And I say old, people have been mining here at Valenciana for 450 years. It's one of the great silver mines from antiquity. Over the centuries, people have taken out close to 2 billion ounces of silver from the mines of Valenciana. And you can see this is a 4.2 kilometer long structure. It's the best producing area along what is called the Veta Madre. The Mexicans call this structure Veta Madre, meaning mother vein. It's not really a vein structure. It is a regional fault structure that has been intruded by a very powerful gold and silver bearing epithermal system. This has been a mine that's been underinvested in for a long time. Prior to Great Panther owning it since the 1930s, the Cooperativa, which was a local mining cooperative in Guanajuato, mined it, and they mined it in a very old school Mexican kind of way. They went out and took out some silver and gold ore, made enough money to buy tacos and beer, and didn't really spend very much money expanding the resource. We will be able to move this mine back into its greatness by spending some money and using the type of energy and efficiency that we've used at our other facilities. Here's the plant at Valenciana. Again, we'll have this operating in January, 36,000 tons of extra capacity. We'll talk about Topia. You can see the state of Guanajuato, the city of Guanajuato. Topia is in Durango. Topia is a very high-grade mine, also in production for 70 years. The resource that we acquire at Topia is about 1 kilo of silver equivalent per ton. You can see here our share price over the last 2 years. I think we have materially outperformed our peers in the marketplace. And I think that a lot of that has to do with the fact that we've done what we've told people on track, on time, and on budget. I can see that we're running out of time. I'm only going to talk about one of our very important team members in Mexico. I should tell everybody 100% of the people who we have working for us in Mexico are Mexicans. Many, many times British or Canadian or American or Australian companies go to Latin America. They hire a lot of local people, but they bring about 10% of their management team with them. We don't do that. Everybody in Mexico are Mexican nationals. I want to talk about Ramon Davila. I'm the chairman and CEO of this company. Ramon is our president and head of all Mexican operations. Ramon has a storied career. He's got the best CV in Mexican mining. One of the things that he's done is being chief operating officer of First Majestic and built that company. When he joined them as chief operating officer, they had 0 production and 4 employees. When he left, they had 12 million silver equivalent ounces of production per year and 4,000 employees. Ramon left in 2016 to take on a political role. He became the economy minister for the state of Durango, where he lives. And now he is back in the mining business, working full-time with us. I expect to be able to build with Ramon and our team a medium to large silver mining company exclusively in Mexico over the coming years. We're on a very good track. We are Mexico's fastest growing silver mining company, and I expect that to continue into the coming years. So with that, Peter, I think I'm just about done. Where do we go from here?
Well, James, thanks for that. That was a fantastic overview of Guanajuato Silver. And yes, I was down there, and I certainly enjoyed the firsthand view of all the operations. And at this point, we're going to switch over to SilverCrest. We have today with us Chris Ritchie, who is president of SilverCrest. And Chris, the floor is yours. Please go ahead and take it away.
Thank you very much, Peter. I just want to echo a few of the comments Peter made and just add a couple points here. One is we talked about maybe silver going to 5 to 6% of a portfolio. The big question when you talk about how small the silver market truly is why are you having 94 to 95% of your portfolio in things that are related to fiat currency? And this is the data point. I mean, if you look at gold versus the US dollar, that the US dollar's lost, about 97% of its value versus gold over the last 100 years. If you chart the housing market in dollars versus gold, well, in dollars, it's gone through the roof. In gold, it's been flat. And that's the same for most other things we consume. It's not that prices have gone up in most of these goods. It's the purchasing power of the dollar has gone down. And again, as a society, we have yet to truly grasp the idea that fiat currencies are really, really convenient medium of exchange, but it is not a store of value. And that is something that people are just sort of waking up to now. The other comment that Peter made, I'll touch on is, mine supply, going up only 1%. The reality here as well, when you look at mining, when you look at all-in sustaining costs are operational metrics. They don't include the cost to buy the asset, your exploration costs, your CapEx, right? So if you're really looking at the true profitability of a mine, you have to include all the costs. And where I'm going with this is that all mining, copper, nickel, cobalt, gold, silver, you do not have an incentive price today, meaning the commodity price is not high enough for people to be making money inclusive of every dollar that's spent. So all of this new supply that we expect to come online, the traditional banking community has 5% discount rates. They don't include inflation, and we're not anticipating making money, including CapEx. So it takes an industry of people that are going to be scratching their head saying, I don't see how we're going to be making money on a full cycle basis. So when we parlay into SilverCrest, one of the big different things is what we want to try to create for people is healthy leverage. Right off the bat, a lot of people want operational leverage, financial leverage. Silver moves $1 or $2 and stock prices go up 50%. That's all fine and dandy. But when you're looking at the big picture in the long term, do you have enough resilience to hang on for the bad times? can you make enough money in the bad times? Can you offer an investor something where, hey, silver's pulled back. This is actually an opportunity to buy more because the balance sheet's safe, because your margin profile is still safe. So with SilverCrest, we've had a busy year. We just got into production. We announced commercial production. We just refinanced our debt. So think about that. Cost of capital is going up. Access to capital is going down. We just reduced our cost of capital and increased our access to capital. Extremely rare. So most companies, if they're trying to get going now and you want to see this new supply, where are they getting the money from, right? So all this new supply that we're talking about, it's going to be delayed. And that's for copper, that's for everything else. I just don't expect to see it, or I don't expect to see it economically. When you layer on a recession right now, it's actually one of the most bullish things for commodities, because what it does, again, demand might go down a little bit, but cost of capital goes up, access to capital goes down. It just prevents more new supply from advancing. So again, you might be dwindling down on production and inventories at a slower level, but that new supply just doesn't come online. And for people who've been in this space for quite some time, they know that it takes on average 18 years to bring a new mine online. SilverCrest, we were 8. But when you think about not having that incentive price to start a new project, once you get that price, meaning price has to go higher, there's going to be a big lag. So again, who can hang on, who can add value while you're waiting for this to turn? Because again, the picture is extremely clear for all things commodities. We just don't have the supply to meet the demand, right? So for SilverCrest, that's part of what we're trying to create. So we've got low costs, right? We expect to be making healthy free cash flow at today's levels. I mean, the average all-in sustaining cost for the silver ETF, the producers, is around $19-20. So again, last couple of months has been nice, but again, you really not enough to really incentivize a lot of new supply. So one of the ironies is the lower silver goes, SilverCrest relative to the majority of our peer group should be a lot healthier and a lot more resilient. So again, with our balance sheet, we had 90 million of debt and 90 of cash. We just refinanced that debt, paid off 40 million. So we've got 50 million of debt today and 50 of cash and an untapped line of credit. So again, we've got a lot of flexibility here as we're starting cash flow out of the gates. So again, the other element here is that asymmetric risk reward that I've touched on. At $17, $16 silver, we're still making money. We're still adding value. And again, those markets aren't fun, but the worse we get, you're going to see less supply come online, right? So again, it's whether or not you have a vehicle that allows you to sort of have confidence that you can hang on for the bad times and participate in a healthy way on the upside. The scarce high quality asset, I mean, our grade is extremely high. Our reserve grade in our old feasibility study was around 800 grams a ton silver equivalent. We're 100% precious metals, about 55% silver, 45% gold, and we're in production. And again, all of the steps to permit a mine, finance a mine, have a feasibility study, build it during a hard time, not have a capital overrun. We built it on time, on budget. So those are all big steps to sort of reduce the risk exposure to an investor and get to the point where you've got some cleaner, healthier exposure to the metal itself. Couple interesting details in the short term here. We've got a big short position, and a lot of the players in the industry do. It's a lot of people who are playing the Fed, and they're saying we're going to be long the US dollar, short gold and silver. So our last data had us in the neighborhood of about a 14 million, 15 million shares short, and we've got 150 million shares outstanding. So again, a pretty big number, especially when things are starting to turn. So if the Fed tapers, and that is in fact the main rationale of that short position, that gets kind of interesting. And later this week, we're going to find out if or not we get included into the GDX index. We've met the criteria, but again, that's up to them, not us. If we do, that would be roughly 8 million shares of demand. So I say this because anyone who looks at charts, if you go back and look at silver 2 years ago when it was at $26, $27, we had just started to build the mine. We raised capital. We put out our study. We issued debt. Most of the sector's been pretty down since then, but we've executed well. As I said, we built it on time, on budget, balance sheet's great, we're starting production. So we've got a pretty tight share structure. So to have tax loss selling season ending, the short interest is an interesting dynamic that we'll see how it plays out. The GDX, an interesting dynamic. And the irony is for the dedicated investors, if we do have some more weakness in the space, higher costs, less margins, we're one of the companies that's probably going to get some of that marginal flow because of that safety. So again, I think the tight share structure is worth noting for sure. And the last point I want to show, and we'll kind of get to the other parts, is to Peter's comment about the incentive price required to truly see new supply. What we did here is we took 3 identical assets. Each is 100 million ounces of silver, and they produce 10 million ounces a year for 10 years. And the bubbles on top of the different bar charts there are the different all-in sustaining costs. And again, this is a hypothetical. And what it shows, obviously, is the net present value is higher for the low margin asset, right? What I did at the bottom here is we put what happens if you have 5 or 10% inflation, right? And you put that into each year of your mine life. What's the erosion that happens to a low cost producer and a high cost producer? And you can see it's pretty damaging. Now, again, my point here is that in the long-term time horizon, if you don't have the incentive to bring on new supply, or the economics are such that whether or not this is a discount rate, or it's because the silver price comes down, or inflation goes up, or you had some challenges, again, if the incentive's not there to bring on new supply, that market that Peter talked about in terms of how tight it's getting, it's only going to get tighter. And again, when you think about the value of the product itself, the silver and gold, getting through the risks of mining to get to the point where you can actually focus on the silver and gold itself, that's where SilverCrest is getting to. And as even though it's a little less sexy, we want to focus on that risk management. We want to focus on those low costs. We want to focus on that resilient balance sheet, because we want to be a long duration call option. We want to be able to withstand some of these pressures, because the longer you look out, the more clear the long-term upside is. So with that, Peter, I'll turn it back to you.
All right. Well, thanks so much, Chris. I appreciate that great overview and insight on SilverCrest. I want to remind everyone once again, if you could please post any questions that you have in the chat. We would love to address those and have the company presenters today address any specific questions on their companies. So next up, and our final presenter is going to be Andrew Pollard, who is President and CEO of Blackrock Silver. Andrew, if you are ready, please go ahead. The floor is yours.
Yeah, I'm going to start off by commending you on putting together a great lineup here, because it's not often that, you sit on these things and, you actually respect 2 companies. But, in this situation, I can actually say that I own shares in both companies. And, that's for a couple of reasons. One, management teams in both of them have already executed, and they're, proving that every day. Both are great stories, but the real reason that, I've gone in on them were the same reasons I like my story. It's the grades, high grades. And in a market like this, grade is king, grade counts. And, I'm going to take you on a little journey here. It's funny watching Chris present, because I feel like, especially given the time of year, I've just been visited by the ghost of Christmas future, because I see a lot of similarities in what we're doing and what SilverCrest did a few years ago, taking it forward from discovery now to commercial production. And I see that same path forward here. And there's a lot of similarities between our deposits as well. But ultimately, where we are, I think the future's bright. Certainly some forward-looking statements. As I said, we've got the ghost of Christmas future and SilverCrest. Everything that I'm going to be speaking about today is about what we're aspiring to, what we think we might have, what we're going to achieve. But, given the time of year, I may as well do the ghost of Christmas past and present and make this a story in the form of Dickens. So, here we are, it's December. It's been a wild ride. It was 3.5 years ago that myself and what's become the management of Blackrock stepped in. Very different story back then. It was really just an idea. $1 million market cap, 3 cents, May of 2019. And we've always been focused on high-grade discoveries in prolific districts on projects that just hadn't really been given a chance. Now you can see what a true discovery really can do to a stock price. We hit on our first drill hole at Tonopah, which has easily become our flagship, and we've now emerged into a globally significant silver discovery. We went from about 40 cents to 160 in a few days, so over $100 million of market cap created like that on one drill hole. Since then, it's been a wild ride. We fought the market. That same week that we came out with that first drill hole was the last time silver was around 29, 30 bucks. Also coincided with when gold was pushing through its all-time high at that point in July of 2020. Now, even just going to this year, I mean, heck, February of this year, before we had any ounces to our name, we were at our high for the year. I think we were around $1.30. We had 0 ounces. Since then, we've now backstopped our ounces with the highest grade undeveloped project in the entire silver industry at this point. We stepped out more than double beyond where the resource left off. And we've made what looks to be a potentially very significant lithium discovery right on the doorstep of that too. So we're not only just tied to silver and gold, but we've actually got a lithium kicker, which we're scratching our heads trying to figure out what the heck we're going to do with it. But yet we're trading at about 56, we're trading about 40, 50% less than we were before we had 0 ounces. I'd be pretty pissed off. I'd be more pissed off than I am right now had I not, seen the opportunity and put over $200,000 of my own capital to work in the company in the last month or two. Since September, I've gone in the markets and just been buying everything I could possibly get my hands on for what I had. It's a good thing I'm not married, because at this point I probably would have hawked her jewelry, but I guess some things are better left undone. But all I'm getting at, and Chris touched on this too, is there's value here. One of the reasons why I've been putting capital into other companies too is because I understand this business. I understand that prices cannot stay this low, and the cure to low prices is low prices ultimately. And what we've got is something that's truly special. Now, we are a discovery driven company. We're on the very, very opposite end of the Lassonde curve to what we just saw with GSVR and SilverCrest. They're trading their gold and silver for dollars, for green. Right now, we're still very much in the speculation phase, and we've got, I guess, 3 different projects right now, all of which gear us towards, adding value via the drill bit. And, we don't know how big these things can get, but certainly at Tonopah, which you'll see in the heart and soul of the Walker Lane trend there, that's the big kahuna for us, the highest grade undeveloped silver project in the world. We did that on a 1.5 years worth of drilling, but we've got another gold project, which we recently just drilled up in northern Nevada, which was actually the original flagship for us. Haven't pieced together anything yet, but we've got assays pending there, and that's in the shadows of 2 of Nevada's highest grade gold mines. So if we hit up there, I mean, we know, the size of the prize could be big too. And then of course, you got the lithium project right down there at Tonopah, which we just happened on doing some scout exploration, which I believe exploration companies should actually do. So Tonopah itself, given this is a silver, given we're a silver company, and given this is a silver panel, this is a new discovery in a historic district that had just been forgotten about for 100 years. This district is one of the reasons why Nevada is not known as the gold state. It's known as the silver state. This and the Comstock Lode were the 2 most significant, large, historic, high-grade silver districts in Nevada. The Comstock petered out naturally. Tonopah did not. Tonopah really went belly up and became dormant at the onset of the Great Depression. It was discovered in 1900, and in about 30 good years, produced nearly 2 million ounces of silver, 2 million ounces of gold, and 200 million ounces of silver. But the best part was that was only from about 7.5 million tons. So that means 2 things. It means it's high grade, and it means the metallurgy is fantastic. The old timers didn't leave any meat on the bones. We're going back into this district 100 years later and trying, that one drill hole that I showed you, that proof of concept drill hole, that tied together the one theory we were trying to prove, because every drill hole set out to prove a theory. That proved that the old timers did not stop mining because they ran out of gold and silver. They stopped mining due to low metals prices. Well, in a 1.5 years worth of drilling, we were able to tie together about 3 million tons at a block diluted grade of 446 grams per ton. Similar to SilverCrest, it's just gold and silver in this. There is no base metals in here. That means, you'll see in a second, but that means that, from a few different standpoints, these ounces should command more than most other projects out there. It means straightforward metallurgy. But listen, not all resources are the same. There's junior friendly resources, and then there's resources you can actually, that a major mining company could look at and they could actually respect. We decided that this project deserved respect right out of the gate. So we constrained it the way a major mining company would and not how a junior would. As I said, we presented in block diluted grades. We didn't use any exotic mining methods going into our resource to try and add gristle to make a wish. No, all of the mining methods in here, it's long hole stoping primarily, cut and fill, minimum wane widths of about 1.5 meters, meaning anything below that, anything that didn't make that cutoff using our mining cost assumptions for both, didn't make it in. We hit 10 veins, which we drilled out for the resource. We only put 6 of them in here. There's still upside potential in terms of finding new ways, bring costs down to maybe bring in some of those veins that we've already hit. But there's more potential already. But here's how this stacks up just in that first 1.5 years worth of drilling. The x-axis along the bottom is the average grade of all of the undeveloped silver deposits in the world right now, worthy of sort of following. What you'll see is that Blackrock is not by a little, but by a lot, easily the highest grade undeveloped project in the industry right now. The other thing that you're going to see is that, the gold, the gold bubble you see there, those represent the pure precious metals deposits. There's very few of them. There's even fewer with actually high grade. In fact, you'd have to cut our grade down in half, by half, to sort of get in the realm of all the other pure play precious metals deposits. To put a frame of reference on you, I've got SilverCrest up there. They just entered commercial production. Now the y-axis, the one along the top, that's showing what the ounces in the ground are currently valued at. What you'll see is that our ounces right now are somewhere around $1.40, $1.50. SilverCrest, is they're in commercial production, they're commanding north of $7. What does that mean for us? Well, that means we can grow the project in a few different ways. One, obviously add more ounces. Two, obviously ratchet up the grade and start targeting the high grade structures. And I'll use one more SilverCrest reference. Their maiden resource actually came out very, very similar to ours. There was about 3.4 million tons at the exact same undiluted grade as ours. Now, why is their grade so much higher than ours? Is because once you actually go past the broad strokes of a discovery and you can hone in on the high grade structures, drill those out, the high grade tons pile up and the average grade of the deposit ratchets. That's where the ounces pile up. We see a very, very straightforward plan to move the value forward here. Obviously, we're trying to add ounces, we're trying to de-risk, and we think we've got the same sort of potential to ratchet that grade up. Obviously, I don't want to take up too much time, but what I'll show you a few unique things about our project, simply because we've got some very good situational advantages. What you'll see here is what the district looked like in 1912 on the lower half of your screen. Lots happened since then. You'll see a satellite image of what the project looks like today. Now we've got that yellow line cutting across our project. That yellow line is US Highway 95 that connects Las Vegas to Reno. We're literally walking distance from the town of Tonopah, Nevada, that is there because of the original discoveries on the east side of the district. Our drill right now is set up behind a Burger King and Subway. We've got power. We don't have to build man camps. All these things mean that a lot of the headaches just don't exist. So the old timers, as I said, this is a rediscovery. We're picking up where the old timers left off. What I'll show you here, these squiggles that you see on the main page here, these represent the historic workings. The northeastern portion of our project, they mined this area down to around 1,800 feet, where they hit water and they got turned around. And then that same company drifted across to the west and they hit a series of 4 veins here. They never got around to pulling out ore from these veins. This is literally doing development and never extracting the ore. The 2 areas that we drilled out just to form the basis for maiden resources are the 2 areas the old timers knew the veins were, but never went around to pulling out. We've since drilled about 150,000 meters. The 2 areas denoted in these green polygons are the resource areas. If you add up both areas, it's about 1,200 meters of strike along the main structure. We've now, since we put that resource out, stepped out 1.6 kilometers, doubling that footprint of mineralization. We've also got another step out in the lab right now, which is another 500 meters. This thing is still wide open to the west. We don't know how big it is, and it's still wide open at depth too, because there's only so deep we can drill from surface. But what we've got is the makings of a very, very significant discovery. And there's a reason why it's the highest grade undeveloped project. It certainly wouldn't be the highest grade mine. The reason it's the highest grade undeveloped project in the world right now is because projects with this grade profile get developed. It's as simple as that. As I mentioned, we've got a lithium discovery right to the north here, which, we're still trying to figure out how to leverage that to, get exposure, but not spin our wheels. And as I said, we've got assays pending on a grassroots gold initiative right next to the Midas and Hollister mines, both of which were two of the highest grade gold mines in the world when they were producing. We should have assays back on this literally imminently. So if we hit up there, the size of the prize is something ideal to Midas or Hollister in terms of grade. We'll see. With that, I thank you.
Well, thanks very much, Andrew. I appreciate that. Again, very energetic and well-rounded overview on Blackrock. Once again, I'd like to remind everybody, if you have questions, to please post them in the chat. And we do have several. Why don't we jump right to that? So the first one to go with, let's see. This one is meant for James over at Guanajuato Silver. So James, the question is from Blair. What is the political situation for mining, both locally and nationally?
Right. Okay. Well, let me address that in two different ways, I guess. First of all, nationally, the current Mexican president, AMLO, is a socialist, and he is no friend of the mining industry. What I do like to tell my American friends is that Joe Biden is a socialist, and he is no friend of the mining industry either. So I think mining has challenges everywhere on the planet that we go. I think that if you look at Mexico as the country that mines more silver than any other country in the world, and if you look at our experience about being able to put all of these mines back into production so swiftly, I think that's a stronger comment. With us too, I think it's a reasonable point. It's a reasonable comment. Because of Ramon Davila's, that's our president, head of all our Mexican operations, because of his past political experience as the economy minister for the state of Durango, in my journey to Mexico in August, we were able to meet with the governors of both the state of Durango and the state of Guanajuato at different times. So Ramon's Rolodex does allow us to have the opportunity to meet with important political figures and discuss, what it is we need, what it is we're trying to do. And that's always better, I think, ahead of time rather than when we have a problem and going to ask for help later on. So I hope that addresses the question.
Yeah, thanks very much. Okay, so some great insights there. The next question is for Chris Ritchie at SilverCrest. Chris, the question is ramp up going smoothly? Are there any details that you can discuss, please? That would be appreciated. If you could just,
there we go. Yeah, there's a few parts of ramp up that are always worth noting. One will be, is the plant working? Right. And for us right now, everything's going extremely well at the plant. Part of that is also, are you getting the amount of gold and silver out of the rock that you anticipated, called recoveries? And so far, that's going extremely well. One area that we're still kind of ramping up a little bit is on the actual mining itself. When you've got high grade, narrow veins, any changes that you have in terms of, if you're taking more waste, that can change the grade that actually makes its way into the plant. So there's details of that in our MD&A and our last couple press releases. But one of the beautiful things that we have, and I give Eric all the credit for this decision that he made, our CEO, we started doing underground development before we even put out a PEA. So before we had our first economic thumbsuck of what this project was, we were already mining. And what that means is we have a lot of stockpiles already sitting on the ground. So part of the risk is always, can you get enough material from the mine into the plant on a daily basis to fill the mill? And for us, we have, I think about this year, about 70% of the material going into the plant was from the stockpiles. And in the original feasibility study, next year we had about 30. So I call that insurance. We've got a lot of insurance there. But in terms of, the people, the area, our power lines up and running, everything's there. But like I said, I will point to, like, it is a little bit tricky right now. We're sort of ramping up the mining side a little bit. Other than that, starting to see some good cash flow.
Excellent. Thanks very much, Chris. Here's one that's maybe a little more macro oriented, and I'll open this up to anybody who would like to take it on. But so Eric asks, we've seen gold perform more as an alternate currency than its traditional reputation as a pure inflation hedge. The role that it had in the 65 to 80 inflation period was more as a commodity. In the past 20 years, silver has been 50% driven by its precious metals role and 50% as a commodity for its industrial applications. With the forecast of increasing demand for industrial use, do any of you see silver behaving differently in the future from the split identity of the past 20 years? Anybody want to jump on that, or I'll be glad to if
I'll make a quick comment. I mean,
sure.
In that we've got this world now where we've relied on hyper financialization, money printing. The top 10 currencies of the world increased by supply by over 11% per year from 1965 to 2015. So that's pre-COVID. That's pre this last giant wave of financialization. And we've seen one too big to fail scenario lead to the other, from long-term capital management to the tech crash to 2008 to now. And we've finally kind of gone over this hurdle where we cannot keep up with our bills as a federal government across many countries here. So again, to me, it's more about the destabilization of the fiat system than the specifics of the short-term machinations of gold and silver. I just don't think people should be trusting, too much of their net worth in fiat currencies.
I would agree. I certainly do. We're going to jump to a question for Blackrock. Andrew, so you had news out recently on another project that you completed drilling on, Silver Cloud in northern Nevada. Tonopah has been a flagship since you made that initial discovery. Perhaps you could tell us a little bit more about this project as well, Silver Cloud.
Yeah, well, as I sort of mentioned in the intro there, Silver Cloud is actually the reason why, management is here. I joined, I originally came into Blackrock as an investor in 2018 when they did the deal to get Silver Cloud. It's the first time any junior had gotten a clean deal on the project in over 20 years, since Teck and Placer Dome drilled it back in the early 2000s, both of who made some good looking intercepts but lost their budgets when gold just kept tanking, and it had a really onerous royalty deal on it. I came in because management seemed to have dropped the ball a bit. The company was not circling the gutter but halfway down the drain, and I realized that project had a lot of potential which really hadn't been realized. No one had put a drill hole into it in 20 years, 15 years, but with the right team behind it, we could probably do it. So I added Bill Howell to our board, who used to be head of exploration for Placer Dome back when they had the project, and he oversaw everything in Nevada. And he drilled something like 12 meters of 5.5 grams per ton on it in 2001, and he lost the project. It was easy. That was one that he fought for to get a budget back then, and no majors were doing large scale exploration on it. And that was sort of the one which he had some junk in the basement and wanted to get back behind. So when I came in, he was the first call I made. It'd be too good to be true to get him. And 20 years later, I gave him back the keys to Silver Cloud. And, we haven't had much luck. We've hit up to 8 grams. Our first drill hole ever as a company hit 8.5 grams and no one cared. But that's because the two mines right around us both produced at, over an ounce per ton. The Midas mine, which we're right on trend of there, was so rich that it made Franco-Nevada change their business model at one point and become mine operators. Kept Newmont profitable in the early 2000s because of that grade. And we just see a lot of potential there. This has been more of a passion project for us since, obviously Tonopah's commanded all of the valuation, all of the value driver. But, we wanted to do this, what could be our last 3 drill holes here with the project while we can still sort of raise money. Because, grassroots exploration projects are very hard to move forward in this market. So we'll see. We're taking a big kick at the can here, but if we hit, we're hoping for something Midas style. And we'll let the assays do the talking.
Right. Well, great. Thanks for that. We have a question again for James. How long is the expected life of the mines at Guanajuato?
So the resource base that we bought with these mines would suggest a 5 to 6 year mine life. That's not unusual when you're dealing with high grade, narrow vein mining situations. The other way that I'd like to answer that question, though, is that these mines have been in production, in the case of El Cubo, for 120 years, in the case of Topia for 70 years, and in the case of Valenciana for 450 years. So I think it's unlikely that we're going to stop mining there anytime soon. Certainly with the mines of Guanajuato, I always tell people, my grandchildren are going to be mining these deposits. So how do we stay in front of what we've mined to ensure that we've got more material to mine into the future is to keep drilling and keep exploring. Currently, we've got 3 drill rigs turning on our properties, 2 at Topia and 1 at San Ignacio. We've budgeted a $5.2 million exploration program company-wide on these assets for 2023.
Excellent. Thank you. We have another one. So let's see. This one is for Andrew. Are you increasing global energy costs predicted to put a damper on ramp up and expansion with respect to market demand for metals? Is this a minor factor affecting projected results for the company?
Well, there's a lot of projects out there which are marginal at best at these levels. But the best thing that makes all 3 of our companies stands out is the grades. Grade is king. High grades mean high margin typically, if all other things are equal. And we've got that in spades. I mean, so the energy costs we're seeing right now, I mean, we're seeing diesel costs have exploded in the past year. Steel casings for our drilling have exploded. I mean, those are up probably over 1,000%. I think it's wild. So costs do go up, but ultimately all this expansion, to move to electrify the world will require silver. Whether it's solar panels or whether it's just everyone in the world getting a cell phone. There's little bits of silver in everything. EV cars use 3 times more silver than a regular gas one does. So, there's very little supply. There's very few silver primary mines out there in the world right now. Maybe less than a third of all silver production comes from true silver mines. Most of the times it's a byproduct. It's the few silver companies that have stories leveraged to the price of silver like we do that are able to really, really catapult and leverage those big runs in silver prices, even if copper doesn't move, even if zinc or lead doesn't move. We're highly levered to silver. Gold's not a bad kicker. And I'll tell you what, if I could pick any third, it would be lithium because it's pushing through all-time highs right now already. And I've been told I should be on lithium by many people. Now at least I've got my own supply. So.
Excellent. Well, great. Chris, here's one for you. SilverCrest 1.0 was purchased by First Majestic because you were a 1 mine producer. Would you consider any acquisition offers going forward?
Yeah, this is back to the dynamics we were talking about, total cost to build a mine. When SilverCrest 1.0 was purchased by First Majestic in late 2015, silver was around $15. The purchase price for that mine was $154 million US. What that represented in terms of the pro forma percentage of First Majestic was 23%. And that's because they had low costs and a good balance sheet. First Majestic had some higher cost operations, so it wasn't able to be as resilient in a down market. So our relative strengths were very pronounced at low silver prices. Again, $30 silver, most everybody does pretty well. So to us, if someone came to us at a low silver price and said, hey, let's buy you at a low price, I would say, go get your own mine. Because again, when we talk about the true incentive price required to find it, purchase it, explore it, your CapEx, your risk, your tax, then you have your operating costs, right? So again, building these new mines from scratch, no one's trying to do, like very few people, it's very hard. Like you need high grade, you need really unique projects like the panelists have today, right? But the stuff coming from scratch takes a bigger incentive price. So, we're very open to things like that, being a one asset company. We almost hope that the market, struggles and whatnot, because it will really highlight our relative advantages. Other than that, we've got the balance sheet, we've got the project. If we don't like that price, it's not something we need to entertain.
Great, thanks. James, here's one for Guanajuato. Where will the growth come from for your company?
Well, I think if you look at the almost exponential growth that we've had month over month and quarter over quarter in production, that can come from all of the operations that we've had. So even with the record production that we had in the third quarter, only 2 months of that was included production from Topia and San Ignacio. In the fourth quarter, we'll be able to include production from Valenciana, and with all of the mines, we can continue to ramp up well into 2023 and beyond. And then, of course, we have become known as a transactionally oriented company. That's why we call ourselves Mexico's fastest growing silver company. Are there other opportunities, in the Guanajuato area, certainly, and in Durango around Topia and throughout central Mexico that we could act on? I think that the company is built for growth and built for expansion, and having Ramon Davila spearhead that in central Mexico, I think makes our aspirations to grow the company through acquisition very believable.
Excellent. Thank you. Here's one for Andrew. 2022 is almost behind us. What's your outlook as we head into 2023? What can investors expect in terms of news flow in the short term, medium term? What's on the books?
I'd say, well, the year's not over yet. We've got drills turning. Well, we just completed that program at Silver Cloud. We've never stopped drilling Tonopah since we started in June of 2020. So there's always the potential for another tranche of drill results from Tonopah. Silver Cloud, that's imminent. Could be, I'm expecting it to have before Christmas, could be even sooner. And then, that lithium thing, I mean, that's a big, we've had a substantial amount of interest come in on that. It's right next door to a company called American Lithium's TLC deposit. And I mean, they're a $500 million market cap just on the back of that project. And what we're drilling is very similar grades, similar rock, right at surface. I mean, if anything, if we were to find an operator that wants to come in and just scoop off the surface level stuff for us, that'll probably make our job even easier, trying to target some of the gold and silver we've yet to hit there. But we're certainly engaged in some discussions right now and open to ideas from companies that maybe we can hitch the lithium to their train as they grab momentum and use other people's money to develop that. But more of the same. I mean, once again, we hope to make new discoveries, because that's where some major leverage via the drill bit is. And the Silver Cloud, we've got 3 kicks at the can there. That's pretty small as drill programs go, especially with these buried hidden targets, but we'll see. So as we put a news release out last week saying that it looks like, we might be onto something there. So you never know. But Tonopah, I mean, that's really where all of our focus are as a company is next year. We're driving it forward. We've got a resource expansion program going right now, connecting that 1.6 kilometer step out to the deposit that backstopped our valuation originally. And we're still trying to, chase it. We have no idea how big this thing is. So more riding that speculation exploration phase of the Lassonde curve, but hoping the headwinds in the industry persist or ease up a bit, and we get some movement here, but I'm sure ready.
Okay, well, thanks for that. On that same note, why don't we finish up with both Chris and James. Chris, maybe you can tell us, give us an overview of what's in the pipeline, what kinds of catalysts investors can look forward to over the next, say, couple of quarters or so.
For us, one thing I touched on was, again, the GDX, whether it happens this quarter, next quarter, or some future quarter, we'll see how that transpires. That short interest, again, it's more macro driven. I think for people who've looked at our execution to date, again, that's pretty significant. And again, you can go back and look at sort of the end of 2019, early 2020, right when we were raising capital and whatnot. Huge amounts of stock, like over 3 billion of stock was trading above $10 US. So down here, I mean, anyone who's wanted to sell has certainly had an opportunity. And again, as a macro trend, our space has been very much out of favor. So again, we're at a pretty clean stock that's just coming through that Lassonde curve phase with that clean balance sheet. So I think that's definitely worth taking a peek at. We'll get back to some new drilling. It'll be a little bit tepid in the first part of the year. One of our priorities is to hurry up and pay back the rest of that debt. I mean, our interest rate is a lot less. It's about 4 percentage points lower than our project financing, but it still moves as a variable rate with sort of the new version of LIBOR. So for us, it's going to be just get this mine up and running, get that flat cash flow coming. And I really want to go focus on the bigger funds that haven't touched us yet because of our risks that we had. And, again, further tighten up that float and try to hit more of the retail side for the type of stock that hopefully has a little less risk, a little more resilience, and still will participate in the upside. So for us, I want to create leverage via, a tighter share structure and play for the long term.
Excellent. Lots to look forward to. James, the chance is yours now to kind of round out, give us as well your overview of what kinds of things investors can look forward to over the next sort of quarter or two, what kinds of catalysts might be in the offing.
Yeah, okay, fair enough. Thanks, Peter. I think that if one looks at our share price performance over the last 24 months, I think that it's fair to say that we've outperformed the vast majority of our peers. And I think that you'll see that continue as we continue to ramp up production. I mean, perhaps investors are tired of hearing me say that, but I don't have a better epithet to describe what we're doing here. So I think, month over month, quarter over quarter, we've got higher production and a better cost profile. So I think that's really good. As I mentioned, we've got a budget of $5.2 million to spend on exploration next year. There are some outstanding targets, especially at Valenciana, that could really change the outlook for resource expansion and discovery at that area. And the market will come to know more about that as we work up those targets in the future. Our head of exploration now, perhaps we haven't talked about that enough. Our head of exploration is Ronaldo Rivera. Ronaldo was head of exploration for Gold Corp in Mexico for 10 years. So, real, very experienced guy operating with perhaps bigger budgets usually than we are able to offer him right now. But nonetheless, he's bringing an imagination to our exploration that I think will have benefit and fruition in the months ahead.
Well, excellent. That's a great way to cap things off. I think with that, we're going to wrap it up. We are an hour and a quarter into this. We've addressed pretty much all of the Q&A questions in the chat and touched on a few others as well. I'd like to thank all of the presenting companies. I think everyone did an outstanding job, really. I'd like to thank all of the attendees as well. I think they've gotten a lot to chew on and some excellent quality companies to maybe do a little bit more digging if they'd like, and maybe address some questions too directly if they'd like. I'd like to thank Metals Investor Forum for hosting this great webinar. And with that, we can basically sign off. Again, thanks to everyone for attending and everyone who presented today.